an interesting conversation around SIFs. And for a lot of you who are trying to understand what is this, remember the product category got a nod from SEBI about maybe 3 months ago, or maybe slightly longer than that. And we were waiting for the first of the products to come on stream. And I think we've found that because Edelweiss AMC has decided to launch, or at least has got the SEBI nod to launch SIFs with a new platform, which they are calling it Altiva, if I'm not wrong. So what kind of investors would fit into the SIFs category as a product category, whether you should invest into it or no, the benefits and the negatives, if you will. Get in two people to speak about this. Firstly, Radhika Gupta, MD and CEO of Edelweiss MF, who is launching that. And of course, parallel to give us that advice is also Kshitij Mahajan of Complete Circle. Both of you, thank you so much for taking the time out. Radhika, now we spoke about this product category when it first got unveiled about 4 months, 5 months ago. I don't remember the exact time, but then, and we were thinking as to when do investors get a chance to now start putting money into it if they deem fit. You are first off the pedal. Tell us a bit about this.
No, we're very excited about the brand approval for Altiva. And of course, it is the brand approval. After that, there's a process of product approval. But we're hoping over the next couple of months, and I think SEBI's been very supportive and kind in terms of creating the infrastructure and speedy approvals. But we're hoping within the next couple of months, at least from us, we should see a SIF in one of the categories out soon. So I think that's the timeline that investors have. Since the Altiva announcement, we've sort of been flooded both from the distribution community and the investor community on when is this coming out, when can I invest? And I've told people product approval hopefully coming soon. As you know, Neeraj, they've defined 7 categories under which you can apply for SIF licenses, equity, hybrid, and fixed income. And then there are subcategories within each. So we intend to file in one of the categories and hope to get our approval.
Can you tell us a bit about this, Radhika? Because no, I mean, I should have done my homework, but I don't know. So what are these categories? Why are you choosing this particular category? And what kind of investors should approach, for example, the category where you are investing, where you are launching, versus some of the others available?
So let me simplify this in a way that mutual fund investors understand, because
Sure.
everyone understands mutual fund. SIF is just a mutual fund scheme with a little more flexibility than traditional mutual fund schemes allow. Flexibility primarily in terms of use of derivatives and in terms of alteration of subscription and redemption. So how frequently you can subscribe, how frequently you can redeem. These are the two broad and some concentration limits. So a SIF is a mutual fund with specific flexibility, and in return for that specific flexibility, the regulator says, well, take money at a 10 lakh minimum. All other mutual fund regulations actually apply to SIF. People sometimes think SIF is a different platform like AIF or PMS. Actually, it's part of the same trust infrastructure that a mutual fund is part of. It also has the same taxation treatment that a mutual fund is part of. So that is actually very, very important. Now, mutual funds have 3 categories: equity, debt, hybrid. SIF also has equity, debt, hybrid. Within equity, there's an all cap kind of construct. There's a sector rotation kind of construct. There's a X top 100 kind of construct, which is your mutual fund mid and small cap. In each of that, there are categories and mandates. The only difference is in a mid and small cap fund on the mutual fund side, I can't do a naked short. In a SIF, which is an X top 100 SIF, I can do mid and small caps, but I can also go short. Similarly, in the hybrid category, there's an asset allocator, there's a long short, and then there are 2 fixed income options. Our likely filing is going to be in the hybrid category. And the rationale for that is we believe that there are a lot of risk-taking solutions out there. It's not that we won't participate there, but between AIF and PMS and equity and mid-cap and small cap, lots of that is out there. There is a need for more tax-efficient, absolute return, fixed income plus kind of solutions, particularly in the kind of times we are in. So that's the customer need that we are looking to solve.
Point taken, Radhika. This is Harsh also joining in. Kshitij, let me come to you and thereafter take a question with Radhika as well. Kshitij, I want to first understand from you who exactly, firstly, what's the kind of interest you're seeing? And second, who exactly are you promoting this to in terms of customers, investors, etc.?
Well, hi Harsh, hi Radhika. So
Hi,
complete
good
sir,
afternoon.
we run a portfolio management service also, and we run a wealth management service also.
Yes.
Now there are many clients who approach us wherein they want to have, and one can make out that with the unique number of demat account holders in countries around 12.5 crore, and mutual fund folios around 5.25 crore. Mutual fund is the most simplest way and most easiest way to invest in equity markets. But yes, people are looking at, because of this recent rally in the markets, the new gen which is coming in the market and looking at a plus returns, and everybody's eyeing what else they can look at as an investment opportunity. So my view is that many people, they come up to us, but they don't have that 50 lakh as a total sum to participate in equity, and they want a professional managers to manage it. And there are many people who will now look at this category where there's a professional management, where there is no capping off in terms of they have to look at 50 lakh, you can do 10 lakh, and 10 lakh also per pan you can do into multiple scheme as per the given fund house different offerings. So I think there are a lot of youngsters who are looking at this scheme. There are a lot of people who want to take risk, but with less amount, they are looking at this side of investment platform. So you will see a common interest which is coming up from many people, and we can actually see from the way there's a lot of interest which people are showing in unlisted market also. So things will happen now where you have all type of categories which will come up. Radhika was talking about the hybrid category on what they are coming out with, but yes, there will be interest on direct equity, category, focused 8-10 stock category. Many other things will also come. So where you have FNO also, where you have some participant play through hedge strategies also, long short funds also. Normally a long short fund which you have to do is through 1 CR ticket through IF route, but here you can do through 10 lakh rupees also. So there are interests which are with the people, but they don't have maybe that much capital. Maybe they don't want to allow, or they want to participate with that much capital. So I think a lot of interest will come through this.
Radhika, the minimum investment is currently capped at 10 lakhs. Give us some perspective as to why that is so. If it's largely similar to a mutual fund, then why cap this at 10 lakhs?
So I'll make a couple of points on this. One is that, yes, it is similar to a mutual fund, but I think there are two things that are different. One, the use of derivatives is not for hedging. Now, I could, in mutual fund world, I could long stock A and I would have to short stock A in the same quantum. Here I can short stock B. Derivatives come with their own sense of understanding and nuance. And I think that requires a savvier investor. For instance, when you go short a stock and you are wrong on that call, actually the size of your short position increases. When you go long on a stock and you're wrong on that call, the size of the long position comes down. So derivatives have their own complexity that I think it's important for people to understand. SIF is also a lot more open in terms of what you can do in terms of credit exposures. Not all funds, unlike mutual fund, have daily liquidity. So the equity category will have daily liquidity, but the hybrid one and fixed income one will not have daily liquidity. So it's important, and mutual fund has acquired a very clear branding that my money is there when I need it in 2 days. This is simple, as I say, dal chawal stuff. So I think it's important that we segregate the category. But that's why, by the way, SIF also requires a separate brand name. You can't launch SIF as Edelweiss MF SIF. I'm launching SIF as Altiva SIF. So I think the regulator has been very clear that this is like mutual fund, but it's a different cousin. So different audience, different brand name, so that you're very, very clear. I would say that compared to, since Kshitij mentioned AIF and PMS, 10 lakhs, that too at the AMC level, really opens up your customer set. When you're talking AIF, which is 1 crore, you're talking about a consumer who has a liquid net worth of 10 crores because he or she's not going to put more than 10% in a single AIF. When you're talking SIF, you're talking about a consumer who probably has a liquid net worth of 1.5 crore. The difference between 1 and 10 in terms of consumer set is very, very wide.
Fair point. Kshitij, Neeraj here, just one final question here. And for people who want to become, let's say, have the risk ability of investing in a PMS, I mean, okay, would you say that instead of a mutual fund investor who is investing in a long only product, this might be more suited to, let's say, a person who's got the risk appetite or a affinity, forget a risk appetite, I'm guessing PMS also are pretty cool now, but the affinity of investing in a PMS, which is a slightly more niche product than a mutual fund, but does not have the ticket size of 50 lakhs or an AIF's ticket size of 1 crore, and does this become a product for her or him?
Neeraj, yes, I 100% echo that. Many people are looking at, doing something more than mutual fund. Looks like they think that mutual fund is a very simple product, but I think last 6, 8 months have been a great lesson for most of the people around. I think it's not even MF is also not a OTC product, but yes, people with risk appetite are looking at participating into a different set of products, which is little more complex and little more alpha generating. That's what they feel, and that's how the SIF category will gain from it. So many youngsters I'm talking to, and they are looking at that. Let's say if you don't have time to manage our own portfolio, and they want to have some strategies where they, as I mentioned earlier, they want to have a long short exposure, or they want to have a strategy where they want to have focused exposure. So, but they don't have that type of money to put in AIF or PMS. So, what should we do? So, I think this category will solve that purpose for many of the people. But people who are watching us, I must say that you have to go back and review your risk appetite, because in good markets, risk appetite becomes very high. But in bad markets, it's come back to where you actually belong to. So I'm saying that you have to adjust your expectation from this category, because it's starting in, and let's say how things will work out, how things will shape up, and that's how the category size, the minimum ticket size is kept low. And you can further divide this category on pan level between various offering of AMCs.
Very interesting. Look forward to how this evolves and how this develops, and how various manufacturers look at this, as well as, of course, those which are more client-facing like Kshitij, and how they kind of pitch this to the investor community. Thank you so much, both of you, for coming in and helping us break this down.